Plug Power has long been one of the companies that typically does well when the market is hot. And we've had a great stock market in 2024, but shares of Plug Power are down 52% this year alone. So what in the world is going on with Plug Power? And is this a comeback play? That's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/A, I'll give you their top 10 stocks to buy right now. First of all, let's look at Plug Power's operations, because on the surface, there's a number of things that are going really well for the company, but you dig in a little deeper and maybe the story isn't quite as good. Let's start with revenue. This is the company's operating revenue going back to 2014. You can see that you just look at this compound annual growth rate of 27%. That's a really phenomenal growth rate for most companies. Things have pulled back a little bit over the past year. I'll get to that in just a second. But on the surface, this is a growth company, and you would think a company growing this quickly would potentially trade with an enterprise value over 4 times sales. But there's a reason that Plug Power is also trading for a discount. The reason to be skeptical is this chart right here. This is Plug Power's net income in light blue, and the dark blue is free cash flow or negative free cash flow. So free cash flow over the past year was negative $1.3 billion. That is just a tremendous amount of money to lose for a company that currently has a market cap of about $1.9 billion. So the question starts to become, how are you going to raise money to fill that gap? Are you going to sell debt? Are you going to issue equity? Because clearly this company isn't profitable right now. So is there a hole in the balance sheet in the future? And I think the answer to that question for investors, at least in the stock exchange, is yes. That is a huge problem that needs to be answered. And I want to get to why this is not an easy answer for Plug Power. This is Plug Power's most recent quarterly report. Came out November 12th. And just look at the framing here first. Continued margin improvement in the third quarter of 2024. What does that mean? Let's go down to the income segment and the numbers that they specifically call out. Because when you actually dig into Plug Power's operations, it's a little bit crazy how much money they're losing and how long this has been happening. This is not a new story for Plug Power. Plug Power has been losing money for decades, has been promising to get to positive cash flow, positive EBITDA, whatever metric you want to use, and it never gets there. In fact, those losses get bigger and bigger. So why are they losing so much money? Sales of equipment related to infrastructure and other, we'll just use the 9-month numbers because that will take out a little bit of the quarterly volatility. $252 million in revenue. How much did it cost to generate that revenue? $415 million. They are losing money, and a significant amount of money, on every piece of equipment that they sell. Services performed on fuel cells and related infrastructure. $40 million in revenue. How much did that cost? $35.8 million. But wait, there's another line item here, provisions for lost contracts related to services. So it's not just $35.8 million, it's you have to add in another $38.3 million in the cost to service this $40 million in revenue. So they're almost losing $1 for every dollar in revenue that's coming in. Not even just breaking even on that revenue, but they're losing money every time revenue grows. Power purchase agreements, $58.4 million in revenue. How much did it cost to generate that revenue? $161.3 million. Fuel delivered, $78 million. How much did that cost? $172.4 million. The cost to generate $437 million in revenue in the first 9 months of 2024 was $828 million. That is just crazy, especially when you're spending $330 million on operating expenses just for the first 9 months of the year. You can see why this is not a sustainable company. There is no segment within Plug Power's business that is profitable on a gross profit perspective, much less an operating profit. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. What makes things even more dire for Plug Power is the state of the balance sheet. I want to show this chart that goes back to 2014 because you can see that the company had a ton of cash in 2021. They got a huge investment during the peak of kind of their heyday during the pandemic, but they burned through a vast majority of that cash. You can see that here, that cash level dwindles, and then eventually they have to start raising more cash. I'll get to how they do that in just a second. But to make matters worse, Plug Power now has over $500 million worth of debt. That becomes a problem because eventually that debt has to be paid back. So if you're an equity investor and Plug Power says, you know what, we're just going to issue more shares to fund our operations in the future. That's typically what they've done over the past 20 years. They just continue to issue shares year after year after year to fund their operations. But once you start taking on debt, that obligation eventually comes due. Investors know that that's coming. So they know that there's either some sort of dilution event that's going to come when you run out of cash, or you have to refinance that debt. At this current state, I don't know that there's any way that Plug Power could refinance $500 million worth of debt. So they would have to issue more shares. And that is exactly what they've done. This goes back to 2014, 159.2 million shares outstanding. This chart is actually the weighted average shares outstanding for the past 12 months. If you just go to the weighted average shares outstanding for the past 3 months, that's up to 858.4 million shares, up about 260 million shares just in the past year. So that's how Plug Power continues to fund their operations. They continue to issue shares because they're losing so much money. Now, the question for investors is this money train ever going to run out? Right now, I think we're starting to see indications that investors just don't want to keep funding these operations like they have for decades at this point, continue to get diluted year after year. And that $500 million in debt is the real core problem. Once you start taking on debt, it starts to be harder to issue shares. So if Plug Power stock falls another 50% over the next year, it's going to be that much harder to issue shares to keep funding those operations. Eventually, this could become a penny stock. Eventually, you have to repay that debt, and I just don't see an easy answer for that. So is this a comeback play for 2024? I think the clear answer is no. Doesn't mean the stock can't climb. It has climbed in periods where the market has been very bullish, but there's nothing to indicate in their operations that this is a company that has anything but burning more and more cash in its future. They can't make money on the products that they sell. They can't make enough money to pay for their operations. They're going to eventually have to pay back their debt. They keep diluting shareholders. None of these things are good for investors. So I've been following this stock for a long time. I've been saying this same story for a long time. Seems like the market is finally starting to get it. And I think the future for Plug Power is extremely dim because it's getting harder to raise money at the scale that Plug Power needs to keep this train going. I just don't see where there's tens of billions of dollars for them to raise in the future because there's no value to be had for investors. There's plenty of values out there that you can find and not companies that are just losing money. But let me know what you think about Plug Power in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.